In the vast landscape of wealth building opportunities, real estate has always stood as an enduring pillar of financial growth. Traditionally, investors have turned to acquiring physical properties, yet the magnitude of investment required often poses significant financial constraints. Now, fast forward to the present, an age marked by innovation and enhanced accessibility, several compelling alternatives have emerged. First, there is a dynamic world of real estate stocks, and second, a concept that goes by the name REITs, or real estate investment trusts. Within the world of Indian stock markets, a shining star has emerged, which is the Nifty Realty Index. This index has not only captured the attention of investors but has also left industry experts in awe, soaring to unprecedented heights and outpacing other sectoral indices. In this episode, our discussion is designed to unravel the intricacies of the real estate sector and its prominence in the Indian economy. We'll embark on a journey to decode the factors that have propelled the remarkable performance of the real estate sector over the past year. Additionally, we'll take a deep dive into the recent second quarter results for fiscal year 24. Finally, we'll explore an intriguing concept known as REITs, or real estate investment trusts. So without any further ado, let's begin. You're watching Informed Investor, an initiative by Research and Ranking. India's real estate market is one of the most dynamic and fastest growing in the world. It comprises four subsectors, which is housing, retail, hospitality, and commercial. In India, the real estate sector is the second highest employment generator after the agricultural sector. While the sector has witnessed rapid growth in the past few years, the unforeseen problems posed by the pandemic during 2020 to 2022 dampened the real estate market. However, post-pandemic, the sector gradually rose, and in the last 1 year, it has even outperformed the other sectors. Supported by a growing economy, the real estate sector in India has transitioned significantly. In terms of output, the market size of India's real estate sector in 2022 was estimated at $477 billion, contributing 7.3% to the total economic output. By 2047, India's real estate sector is estimated to expand to an impressive $5.8 trillion market, contributing 15.5% to the total economic output. The real estate sector plays a pivotal role in India's economy, contributing significantly to the country's growth and development. Let's understand how. The real estate sector is not only a major contributor to the country's GDP, but also generates significant employment opportunities across segments. Interestingly, the real estate sector is the second highest employment generator after the agriculture sector and has been contributing about 11% to gross value added growth since 2011-12. The real estate sector is closely connected with infrastructure development as it drives demand for road, transportation, utilities, and other essential infrastructure projects. This collaboration fosters economic growth and enhances the livability of urban and rural areas. The real estate sector contributes significantly to government revenue through taxes and fees associated with property transactions, land registrations, and construction activities. These revenues support various government initiatives and contribute to the overall fiscal health of the nation. The real estate sector attracts substantial FDI, boosting investment inflows and promoting economic growth. FDI in the sector helps expand the supply of quality housing, commercial spaces, and infrastructure, catering to the growing demand from domestic and international investors. This sector plays a crucial role in addressing the challenges of urbanization, providing housing solutions for India's growing population. It facilitates the development of planned cities and townships, promoting sustainable urban growth and improving living standards. It also has a strong multiplier effect, stimulating growth in various industries, including construction materials, steel, furnishings and appliances, and interior design. It also indirectly impacts the manufacturing, transportation, and hospitality sectors, driving overall economic expansion. Interestingly, India's real estate sector has forward and backward linkages with approximately 250 ancillary industries. Now that we've spoken about the prominence, let's look at how the sector performed in the past 1 year. Real estate stocks have surged about 60% in the past year, beating benchmark and sector indices. At the same time, Nifty 50 has given just a mere 8% returns. Surprisingly, the second best performing index was the Nifty Public Sector Enterprises at 51.8%, followed by the auto sector, which delivered close to 33% returns in the past 1 year. The recent surge in the real estate index to a 15-year high underscores the robust momentum in the realty sector. So let's jump in and see what are the forces driving this impressive rally. First up is economic growth and rising disposable income. India's economy is expected to grow at a healthy rate of 6 to 6.3% in fiscal year 24, which is expected to lead to an increase in disposable incomes. This in turn is likely to boost demand for housing, particularly in urban areas. Second is the recovery in demand. Realty stocks have gained in the recent past due to a high sales momentum amid resurgence in end-user driven pre-sales growth. This, coupled with the festive season demand, led to a resurgence in interest and investment in real estate. Third is the stable interest rates. Though the RBI have hiked interest rates by 275 basis points since May 2020 until the most recent MPC meeting in October 2023, deciding to keep it unchanged at 6.5%, this has provided a solid foundation for the real estate sector, instilling investor confidence and providing a stable environment. Next is the foreign investor inflows. A significant contributor to Nifty Realty Index success was a substantial increase in foreign investor inflows, solidifying the sector's attractiveness and driving the index to new heights. According to real estate consultant Westian, institutional investments in residential assets rose 78% to $298.3 million during the July-September period. Lastly, the encouraging second quarter earnings for real estate companies further propelled the sentiment around it, highlighting the industry's adaptability and resilience. To put it into perspective, real estate is a cyclical business, which means it tends to go through periods of expansion and contraction based on various economic factors, and its performance is closely tied to the overall health of the economy. While the second quarter is generally considered to be the weakest quarter in terms of seasonality, this quarter has defied the trend. When looked at the overall constituents of the Nifty Realty, the total revenue in Q2 of fiscal year 24 grew to 56,335 crores, which translates into an 8% year-on-year growth and an impressive 15.8% growth over the previous quarter. When looked at the bottom line growth of Nifty Realty, the second quarter of fiscal year 24 saw a staggering growth of 340% on a yearly basis. This was due to the favorable base and a growth in realization driven by product mix and price hikes, boding well for the sector. Additionally, the profit after tax margin saw a healthy growth of 18% for the second quarter of fiscal year 24, up from the 14% registered in the previous quarter. All of these factors have added up and made Nifty Realty investors richer by a staggering 1.6 lakh crore since last Diwali. Now that we've looked at the overview of Nifty Realty, let's look at the constituents and how they fare compared to each other. First up is the list of the top firms in terms of revenue in the Nifty Realty for the fiscal year ending in 2023. Leading the pack is Macrotech Developers or LODA with a massive 9,470 crores, followed closely by Prestige Estates. Then comes the likes of DLF, Oberoi and Brigade, making it to the list of the top 5 firms by revenue. Secondly, we'll look at the debt to equity component of these companies. The debt to equity ratio indicates how much debt a company is using to finance its assets relative to the value of shareholders' equity. As the capital expenditure and debt element is usually massive for real estate companies, these companies are in a much more comfortable position as compared to the past 2-3 years. Brigade is the most leveraged company with a debt to equity ratio of 1.52, while DLF is the least leveraged at 0.1 times. Now, let's look at how these companies fared in the last 1 year. All the constituents of Realty Index witnessed impressive double-digit gains, led by Prestige delivering a staggering 93%, followed by Macrotech and Phoenix at 78 and 66% respectively. Mahindra Lifespace delivered the least returns at 40%. And interestingly, 5 out of these 10 stocks have hit all-time highs in the past few weeks. Before we conclude, let's take a look at a rather new concept of investing in real estate. Ever heard of the term REITs? So REITs are basically real estate investment trusts. These are investment vehicles that own or operate revenue generating real estate such as office buildings, shopping malls, apartments, hotels, resorts, warehouses, etc., which are revenue generating assets. The revenue generated in the form of rental income is then distributed as dividends and interest among the shareholders. Like every other asset class, REITs has its pros and cons. The benefits are firstly capital appreciation, steady dividend, offering diversification to reduce risk and liquidity as it is listed on the exchanges. The cons are it offers no tax benefits, it is inherent to market-linked risks, and lastly, a huge maintenance fee. Let's talk about the future prospects of real estate sector in India. The Indian real estate sector is poised for continued growth in the coming years, driven by factors such as rising urbanization, increasing disposable income, a growing middle class, along with government initiatives to promote affordable housing and infrastructure development. In fact, according to CBRE, a renowned real estate service and investment company, residential sales in the first half of 2023 exceeded 1.5 lakh units and is expected to reach a 10-year high by the end of 2023 on the back of strong momentum and ongoing festive season. In the years ahead, the sector is also expected to benefit from the technological advancements such as digital property platforms and smart buildings, enhancing efficiency and transparency. Additionally, as NRIs continue to invest in the Indian real estate market with the growing interest in long-term investments, it is estimated that NRI investments will grow from the current 15% to 20% of India's real estate sector investments by 2025. In conclusion, the real estate sector is a pillar of the Indian economy, contributing to the employment, infrastructure development, revenue generation, FDI, urbanization, and wealth creation. With a promising future outlook, the sector is expected to play an even more prominent role in driving India's economic growth and enhancing the quality of life for its citizens. Having said that, this is me, realestate, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.